So hi and welcome to the season 4 premiere of our newly rebranded podcast, Stock Trading for Beginners. So I'm your host, Tyler Stokes, and I'm thrilled to kick off this new chapter with you. If you tuned into our season 3 finale, you heard about my 144% portfolio gain and also how I would trade sort of differently if I started all over today. So what we're going to do in this podcast is dive into sort of the last 2 years of my trading knowledge. I've got a bunch of notes that I want to share with you. It's going to be beginner friendly. It's going to be a little bit of a guide to kind of help you trade profitably without stress. So as always, the only thing that we promote here is our school group. You can find a link to that below in the show notes, or you can go to school, that's skool.com/trading. In that school group, you can find a course about the strategy that I've been using to trade real money and make these great gains. You can also find a course, a trading roadmap course, and it kind of outlines what I talked about in the previous video about how I would start trading today based on what I know now. So when I first started this journey in January 2024, I thought trading was day trading, but I discovered that day trading just wasn't going to work for my schedule. It was too stressful. I've got 2 young kids, a busy schedule, and I can't be live watching the market every single day. So I pivoted to a momentum strategy that just involves trading stocks, and it's very low stress. So when I'm making these podcast announcements and I'm saying, welcome to the Day Trading for Beginners podcast, I'm not really day trading. It just wasn't working anymore. So the focus of this season and moving forward, it's going to be more tailored to the actual strategy that I'm using. In our past seasons, we never really spoke too much about strategy. So this season and moving forward, I'm just going to discuss, what I'm actually doing, the type of strategy I'm trading, and everything is going to align with our school community. So again, I would highly recommend that you go and join that group. So there's a myth out there that trading takes hours a day, that you can't trade if you have a busy schedule, but you certainly can if you pick the right type of trading strategy. So in this podcast, I've sort of grouped what I've learned over the last 2 years into sort of like 4 pillars or 4 keys. So the first one is mastering just one strategy. So focusing on one strategy, learning how to manage risk, managing emotions, and then just understanding how the market moves in general. So that's going to be sort of like the 4 main topics for the discussion points here in this podcast. And this is a little bit unscripted. I've just has some points that I'm going to just talk freely and openly about. So let's jump over to the first one here. The first one is about getting started. Eventually, I learned that the best way to start is by actually picking a strategy that fits your life and then just focusing on mastering that one strategy rather than getting overwhelmed by the endless options that are out there on the market. So this sort of idea is that you want to start fast. You can place trades in really weeks rather than taking as long as I took. And you can do this if you kind of zero in on a strategy right away. So you want to pick a strategy and just learn its tools and its mechanics. And then everything else you can kind of learn as you progress. You can gain knowledge about different markets, different technical indicators, and so on if that interests you as you progress. But the quicker you get trading, the better, because you can't learn experience from a course or from a book or from a mentor. The quicker you can actually start trading, even paper trading, and get in the market and watch stocks, the better. So the idea here is that you want to review your schedule and you want to pick a strategy that is going to work for your schedule. Day trading, it requires you to have a lot of free time during the day. You need maybe 2 to 5 hours a day to sort of make day trading work. Swing trading, it's a little bit less stressful, it requires less time. And then there's position trading, and that's sort of what I've been focusing on, using a momentum strategy. And this really can work with people that have maybe 30 minutes a day or just a couple hours a week. Obviously, if you have more time, you can still make this strategy work. But the idea is that if you can't be live to watch the market every single day and make trades in and out daily, there are other strategies out there. So that's really important. Assess your schedule and pick a strategy that is going to work for you. And that's what I've done in our school group. That's the strategy we focus on. So secondly, it's important to learn the market dynamics and have patience. Patience is really, really key. It's what I learned over the first almost 2 years here. You're going to discover that the markets, they have ups and downs, and staying patient with good stocks pays off more than just chasing quick wins. So again, the importance of gaining experience, being in the market is really important, because sometimes the market feels like it's moving really slowly. Stocks often take 2 steps forward and then 1 step back. Sometimes they consolidate for days and weeks. So if you are not used to this, you could start over trading, you could get impatient. And the more experience you have in the market, the more you will know that when things run up, they're going to take a couple days, a couple weeks, or longer just to cool off. You're going to understand that when a stock runs up 20% in a week, it's natural for it to slow down and make a pullback. And the more trading you can do, the more experience you'll have, and you'll just come to understand that a lot of the market movements, it's normal, but when you are brand new to it, you're going to get frustrated, you're going to get impatient, and you're going to make mistakes. So it's really important to know how the market moves. And the only way to really do that is to gain experience and actually start trading. And then it's important to understand that there are many, many opportunities out there. There's always new opportunities. So you really don't need to chase trades out of the fear of missing out. That's one of the biggest things and biggest mistakes I made and beginners make. When they see a stock run up, they want to jump in and they chase those green days when the stocks pop 5 or 10%. And I've done that in the past. I spent a lot of money jumping in on trades, but you really need to understand that there are many opportunities out there. You don't want to do this. You want to stick to your strategy, stick to your plan, only buy in the areas that your strategy tells you to. So just know that there are a lot of opportunities. If you miss one, you got to just shrug it off and be numb to it and know that there's going to be another opportunity. You can't worry about or focus on just doubling your account quickly with some of these trades that are breaking out. There's always good opportunities. And that's why patience equals money. Sticking with quality stocks, being patient, that's going to lead to growth. And exponential growth doesn't happen overnight. You have to be patient. You need to accumulate good stocks and hold them. And that's where the exponential growth is going to come in. So the next pillar here is about risk management and discipline. So sticking to a plan and managing the risk, it really becomes your foundation for trading. It helps you avoid costly mistakes while also building up your account, building up your wealth. So the strategy-driven risk management is important to understand. Many people sort of say risk management is important, but you need to understand that your risk management is tied to the strategy rules. So you need a strategy that has a specific set of rules that you follow to the T. And these rules should dictate when you enter a trade, when you exit a trade, and the position sizes of your trade. So the strategy that I follow, we really have a simple rule: only buy at support, be careful at resistance, only buy at support. And if you just follow that rule, it's really hard for you to lose money with this strategy. And then with the position sizes, you never want to go too heavy into one position. It can be tempting when you think a stock's breaking out. You want to push a lot of your money on that stock, but over time, that's not going to pay off. You need to just stick to the rules and to the position size rules as well. And this also leads to this idea of over trading. So part of your risk management is going to focus on not over trading. It's another big mistake that beginners make. Trading in and out tends to lead to errors. And this is why the strategy that I've focused on sort of moves away from trading in and out too much. We focus on building good positions in strong bullish stocks. And over time, you're going to build wealth this way. So we avoid over trading. If you want to trade, if you're bored, if you just want to put a trade on, it's generally not going to be a good move. Sometimes the best move is to just not make a trade. So that's really important. One of the big mistakes everyone makes. Stick to the rules. We talked about that. The strategy that you have, even the one that I follow, it's very simple, but actually staying disciplined without letting emotions take over is a real challenge. And this is why, going back to this point on gaining experience, making trades in a paper trading account, and just understanding how your emotions are going to drive some of your mistakes is really important to do. And that's why getting up and ready running, finding a strategy and trading quickly is really going to pay off in the speed that you can progress, make trades and actually get and become profitable. And then the last pillar here is navigating these emotions and then growing as a trader. So again, emotions really can be the biggest hurdle, but practicing with a paper trading account, reflecting on your journey, it helps you grow as a trader. So you might not think this, you might just think that strategy and your technique and the rules are the only thing that you need. But really, when you get down to trade and you've got your brokerage account open and there's real money on the line, emotions can really be a hurdle for many beginners. And this is why I recommend that just paper trade for at least a little bit. Many people in our school group, they are paper trading at the beginning of their journey, and they've reported that they're getting emotional with some of these trades in a virtual account. And this is actually great because when you journal those feelings, when you spot what's going on with your emotions, you can help avoid the mistakes. You're going to make mistakes. Losses are tuition with trading. So you're going to lose money, you're going to make bad trades, but those losses are a part of the learning process. Every mistake makes you better. And it's important that you start making these mistakes in a paper trading account and journaling them and understanding how you're feeling, what you did with that setup and so on. And this is just going to help you progress, help you get better. And you want to make mistakes when there's no money on the line. So ideally, if you can make a lot of your mistakes and be aware of them in a paper trading account, that would be best. Obviously, when you're trading real money, things get taken to the next level, but you're going to make mistakes. But it's important to just understand that that's just the requirement of getting better. And then journaling those, talking about those, even joining our school community and documenting some of your trades, it's going to help you. I've done that with our trading challenge. I talked about the stock Duolingo, and I understood that there wasn't a good time to buy. And then I entered in at a support zone, but I entered in a little too quickly. And I really learned from that to be more patient with some of these pullbacks. So I've talked about that with the group. I shared it, and now I'm much better with those entries. So a lot of things there. It's really important to journal and trade, and you can do all that in our school community. The next point I have here, which goes along with this, is the importance of focusing just on the charts. So you need to stop listening to the news, the market hype, things that don't have any evidence you don't want to follow. So the charts really become your guide for making decisions. And as a beginner, when you're just starting, that's very difficult. I go onto X all the time and I see a post and I need to kind of shake my head and say, this person probably doesn't know what they're talking about. The market top is not in. Let's look at the charts. Oh, we're extremely bullish. We're breaking all these fib levels. No, the evidence right now is the market is strong. It's really easy to get distracted and to get manipulated by the news, by the narratives out there. But you will understand if you watch stocks for a long period of time and track them very well, you will understand that the charts tell the story and the news usually follows later. So super, super important point. And I understand that's really, really hard to do. Generally, I try and avoid X as much as I can and just focus on the charts. Another point here, and this is a mistake I've made in the past, is don't go too heavy. Learn not to go too heavy into one stock. Pullbacks, they might make you nervous. Market highs can get you overexcited, especially if you are over leveraged in a certain position. So you kind of want to avoid these extreme emotions. If you have more than 10% of your fund allocated to a stock, then, when it pulls back or it goes high, your emotions regarding that position are going to be too extreme because you've got too much on the line. So the risk management rules of the strategy that you're following should help you with that. But as a general rule, really, really good investors and traders, they're never too heavy into one stock. So those are the main points that I came across and I had written down after my first almost 2 years of this journey. Basically, if I were to sum it up here in 4 little parts, choose a strategy that fits your schedule and your life. You can't day trade if you don't have several hours a day to make it work. If you're busy, if you've got kids, you've got a full-time job, focus on a strategy that will allow you to still make it work. Again, in our school group, we talk all about that, the one that I'm currently using. Stay patient with market cycles. So you got to watch the market as quickly as you can and just know that it takes time for things to develop. Sometimes things will break out And then if you're thinking, oh, it's up 5% this week, why isn't it up another 5% next week? And so on. So the more experience you get, you'll understand the market cycles, the ebbs and flows of the market. Everything will go up to the right, but it goes up in a zigzag fashion. So when you're watching the short-term market, there's a lot of noise and it can stress you out, but you got to take a step back, look at the high time frame and just know that everything is moving up, but it's kind of going up in a zigzag. Manage risk with clear rules. So this is really important. Your strategy will have a set of rules to follow for entries and exits and for allocation. If you sway from those rules, you're going to make mistakes. And then keep emotions in check by journaling them, being aware of your emotions, and then just focusing on the charts. The charts tell the story. Trade based on the charts. Do not trade based on the news or the narrative. So I think we'll wrap up there. Thanks so much for listening to this episode. Again, this is season 4. We're changing our name to Stock Trading for Beginners. Moving forward, I'm going to share more of the actual things that I'm doing in terms of this strategy, lessons learned. So this is going to be a fun season. I'm looking forward to posting more regularly. As always, the only thing we promote is our school community. It's free. You can go to schoolskool.com/trading. And I'm really looking forward to chatting with you and building a relationship with you in that group. And then you can get access to all our material there. So thanks again for listening today. I look forward to chatting with you in the next episode.